Hello everyone, this is Nick Perry of Schaeffer's Investment Research with your chart slideshow for Friday, January 26th. Today I am back with my weekly check of the broad market indices. In last week's chart slideshow, we talked about how the SPX and the Dow were sort of trading just above these highs here. On the comp, we talked about a breakout above that zone there, and the pullback right towards the 50-day. And the rut, we talked about this range here that has sort of contained the action for the last few weeks. And my overall takeaway was basically longer term support levels. We're kind of pulling away from those to keep those in the back of your mind. But other than that, it was basically we're just sort of kind of meandering. When we turn to this week's charts, we see that not too much has changed. Probably one of the bigger changes is on the SPX, the action right here. We talked about the SPX trying to hold right above those highs right there, at least right at those highs. There was a slight pop above, and now we've got the pullback, and we're coming in onto the support zone. Actually, let me clear this chart off to better illustrate the zone that I'm watching because it's fairly important. Basically, this is right. The 50-day moving average is right hidden by the top of that circle. We've got this support zone here. We've sort of been in this little range right now. And basically, I said last week that if we saw a pullback to this, I would keep an eye on it, and we see a similar type pattern in the Dow. One of the hallmarks of this recent trend has been the fact that there's been little or no pullback. So you would expect to see buyers step in here. If you don't get that, that's a sign that things are potentially changing. Whether that means we're looking for a sharper correction, a break of the trend, whatever. The break of support would be significant just from the standpoint that it's something different, it's something new. It's the uptrend has been very orderly, so a break, would definitely should put you on alert to pay attention to what's going on because something's different. In last week's chart slideshow, I was focusing on the comp. Basically, we talked about there was the top of this zone here. We'd seen a break above it, and we'd seen just a break right below that, and that's where we were talking about it last week. And basically, I thought it was interesting because the breakout in the comp is sort of, we haven't generally been thinking of the comp in terms of leadership. And it looked like the comp was trying to do that. And then you see, that was in the back of Apple news, and the tech earnings haven't been well received over the last couple of weeks. There's been some highlights, but there's been some blow ups and there's been some negative headlines out there. So we've seen the comp break above the pullback, and now we've got just sort of this meandering right in here. And one of the things I talked about was this support zone similar to the SPX and the Dow, and basically saying if you saw a break below that, there'd be something to be aware of. And I pointed out a potential pattern that I wanted to kind of highlight again, and it was basically it's the idea that when you see a break, break below, you see a retest, and then the bigger plunge. And I want to talk about this because I've seen a couple of signs of skepticism on the tech market. There was later on in the blog today, I'll be linking to an article that I wrote that basically talked about some skepticism we've seen. It was an article in a major publication. It was basically calling for the comp, calling for a correction, saying that this failed breakout we have seen, is a sign of a topping pattern. And, there's correction coming, and that could definitely be the case. I think it's too early to call that, so I'd still be inclined to stick with the trend. But I wanted to sort of talk about this pattern again and reinforce it that if we do see a breakdown, what you're looking for is the breakdown and the retest. And the retest right here, where you get the rally into former support and it holds as resistance, and that's really a key telling point when you see that because it's a signal that things just aren't moving how they should be. So anyway, as it stands right now, the comp is still moving sideways. I wouldn't call the uptrend broken. So this is sort of a bigger picture thing to keep in mind down the road. But as it stands right now, we're still holding above support. All right, turning to the rut, we see that nothing's really changed here. Last week we talked about the support here, the resistance here. It forms this range, and the rut has just been chopping in this area here. I wouldn't view that as all too significant. Basically, it's a consolidation pattern at this point to me. So, if you see a breakout or a break below, that's worth talking about, but I wouldn't spend too much time trying to predict what's going to happen. As it stands right now, it's just sort of consolidating those gains. As far as overall takeaways, as far as the intermediate term uptrends that we've been discussing, nothing's really changed on that front. We are seeing some pullbacks towards, minor support, specifically in these areas. So, I mean, that's something that's worth keeping an eye on. I wouldn't, if we see a dip below it, I wouldn't say it's, definitely an end to the uptrend. It would signal something's changed, but change doesn't always necessarily. There's definitely shades of gray. It's not always black and white of uptrend, downtrend. So anyway, for now, I'd say the uptrends are still intact, but we are kind of creeping back down towards support. So that's definitely something to keep an eye on. So, as always, stay tuned to the blog for further updates.